CoreWeave CRWV Beginner's Guide. Imagine you wanted to train an AI model the size of ChatGPT, but you did not have a few $1 billion to build your own data center. You would rent the computers from somebody else. CoreWeave became one of the biggest landlords for those AI computers in the world in only a few years. This episode is educational only, no buy or sell advice, just a plain English walkthrough of what the business does. So, what does CRWV actually do? CoreWeave runs what is called an AI cloud. A cloud, in this context, just means a big collection of computers in a data center that other companies rent over the internet instead of buying their own. CoreWeave's cloud is purpose-built for one specific job: running artificial intelligence workloads on GPUs, graphics processing units, the specialized chips that handle the math behind modern AI. The vast majority of revenue, around 94%, comes from this core service called GPU Cloud Infrastructure. In 2025, that segment did about $4.8 billion in revenue, almost all of it sold on what are called reserved instance contracts, meaning a customer signs up to rent a chunk of GPUs for around 5 years and pays whether they fully use it or not. That is called a take-or-pay contract. The customer commits to pay even if they take less than they reserved. CoreWeave runs these workloads on top-of-the-line NVIDIA chips, the H100, the A100, and the newest generation called Grace Blackwell, which is NVIDIA's flagship AI processor. The other 6% of revenue, roughly $300 million, comes from platform services. Think of these as extras on top of the raw GPU rental: storage to hold the huge datasets AI models need, regular CPUs for less specialized work, and proprietary software CoreWeave built itself. With names like Sunk and Mission Control that help customers manage AI jobs more efficiently. CoreWeave also bought Weights and Biases, a popular toolkit AI engineers use to track their experiments. Total 2025 revenue was $5.1 billion, up 168% year-over-year, the fastest any cloud business has ever reached the $5 billion mark. So, who does CRWV compete with, and how does it win? The most important thing to understand here is who CoreWeave is and is not competing against. The big three cloud companies in the world are Amazon Web Services, Microsoft Azure, and Google Cloud. They are called hyperscalers, the industry term for the handful of cloud giants who operate at planet scale. CoreWeave is much smaller than those three, but it is a specialist focused only on AI. There is also a category of smaller AI-only cloud companies the industry calls neoclouds. The neo just means new, and CoreWeave is now larger than the 15 biggest neoclouds combined. The company's moat being the standard finance word for competitive advantage, the thing that makes it hard for rivals to catch up, is rated narrow, not wide. There are 3 reasons it has any moat at all. First, speed of execution. CoreWeave was the first cloud certified at NVIDIA's highest tier, called Platinum Cluster Max, and the first to bring NVIDIA's brand new Grace Blackwell chips online. It is also lined up to be first on NVIDIA's next generation chip, called Vera Rubin, in the second half of 2026. Second, switching costs, a phrase that means once a customer sets up shop on your platform, it is expensive and painful to move. CoreWeave has signed those 5-year take-or-pay contracts with Meta, OpenAI, Microsoft, and Anthropic, the company behind the Claude AI assistant. Once those customers deploy their AI workloads on CoreWeave's infrastructure, moving them somewhere else gets very expensive. Third, the proprietary software stack, Sunk and Mission Control, gives CoreWeave a small edge, though that edge is still early. Why is the moat only narrow, not wide? 2 reasons. CoreWeave depends almost entirely on a single supplier, NVIDIA, for its GPUs. If NVIDIA's supply or pricing changes, CoreWeave feels it directly. And the hyperscalers, Amazon and Microsoft and Google, have deeper, broader ecosystems with thousands of services attached to their clouds. CoreWeave's edge is execution speed, not a structural lock-in. What are the key drivers for the business over the past 5 years? The growth story is really one big force with two enablers underneath it. The big force is the AI build-out, the wave of money that hyperscalers, AI startups, and large enterprises are spending to train and run AI models. CoreWeave's revenue grew between 112% and 168% per year, and the most telling number is something called the backlog, the total dollar value of contracts already signed but not yet billed. CoreWeave's backlog hit $99.4 billion, which is roughly 4 times what it was a year earlier. With contracts averaging 5 years long, that backlog gives the company unusually clear visibility into future revenue. The first enabler is sheer footprint. CoreWeave went from 0 to more than 1 gigawatt. That is the amount of electricity its data centers consume, of active capacity in only about 3 years. It has 3.5 plus gigawatts already contracted and plans to have 1.7 plus gigawatts active by the end of 2026, funded by a planned $31 to $35 billion of capital expenditure, which is just a fancy word for spending on long-lived assets like buildings and chips. To put that in perspective, very few cloud companies in history have ever expanded physical capacity that fast. The second enabler is platform expansion. CoreWeave started by selling only raw GPU rentals, but it has been adding storage, CPU, networking, and software on top. Today, more than 90% of its reserved instance customers use at least 2 products instead of just one, and several of those add-on products are on track to hit $100 million in annual recurring revenue. Selling more products to the same customer is what finance people call cross-selling, and it tends to lift profit margins because the customer relationship cost has already been paid. To wrap up, putting it all together, CoreWeave is an AI specialist cloud company that rents NVIDIA GPUs to hyperscalers, AI labs, and enterprises on long take-or-pay contracts, while building a wider platform of storage, CPU, and software around that core. 2 things for a learner to watch: how fast CoreWeave brings new data center capacity online, since execution speed is the central moat, and how diversified the platform becomes beyond raw GPU rental. That mix shift tells you whether the moat is widening or staying narrow. Again, this is educational only, not advice on buying or selling. Always do your own homework before any investment decision.